Welcome back, friends. Today we're going to be looking at Britain's mortgages along with discussing some expert opinions about the property crash. So let's jump straight into this. What will happen to Britain's mortgages? Now, as many of you know, the end of cheap borrowing will likely make getting on that property ladder a little bit harder. We've seen in the last few years Britain's mortgage machine continuing to break records, and this summer interest rates on mortgages rose at their fastest pace in a decade thanks to the increases in the Bank of England's base rate aimed at taming inflation. And according to data released by the lender nationwide on November the 1st, house prices actually fell last month for the first time in 15 months, and mortgage rates have now spiraled to the highest since 2008, which I know has seen many people panicking and asking themselves the question, should they refinance and take that early repayment charge or hold out and hope for the best? So where does this actually leave borrowers? Now, by the end of 2024, it is predicted that the annual bill for 1 in 5 British households will increase by the average of £5,100. And the think tank experts expect that in London, annual payments for households will rise by £8,000. So it is a lot of money, which is a huge increase on your annual outgoings. Now, homeowners facing £880 hikes in mortgage payments as interest rates rise again this week. Again, another news article on this, where it spoke about the huge burden on families already struggling with increasing food and energy costs. Now, it does seem like a huge part of the population is getting hit from every single angle. And also those on tracker mortgages have been warned to expect that figure of around £880 a year due to the interest rate rise. Now, as of recording this video, we are scheduled in the next hour to have a further interest rate rise. So do obviously stay tuned for that. Now, as many of you know, more than 1.5 million households on trackers and variable mortgage rates face instant pain, and we know that up to 2 million are going to be refinancing next year. So it's not looking great. But let's quickly look at what the experts are saying. Now, as the UK prices fell for the first time in more than a year, has the opinion of experts now changed? We've seen the annual growth in house prices slow down from 9.5% to 7.2%. And here are just some reactions that I think are worth sharing with yourselves, because you're going to realize this is why I always say nobody truly knows, because we've got industry experts, economists, all speaking about certain things that obviously we've mentioned on this channel, but there's no general consensus or agreed opinion across them. So Ian McKenzie states that higher mortgage rates will impact some house sales, but demand remains high in many areas, and the lack of supply is likely to cushion prices for major corrections. I just want to say the key thing here is in many areas. This isn't going to be the case everywhere. Samuel Toms, an economist at the consultancy Pantheon Macroeconomics, they stated that this is the strongest signal yet that house prices will buckle as pressure on household incomes intensify. And if I was to choose between those two opinions just there, I would probably lean more towards Samuel's. Now, Nathan Emerson, chief executive of Property Mark, said agents are still reporting more homes for sales coming onto the market. And this is actually a good thing because it gives buyers more choice than they had over the last 2 years, and they no longer have the fear of losing out on a property and can therefore be more level-headed with offers they're putting forward. We've seen a lot of FOMO, we've seen a lot of people overspending. So this is actually a good thing because there's less emotion tied to the actual offers. And essentially this will naturally see a softening in the prices being achieved over the next few months, which again, I would say is probably area specific, but it's nice to see that people aren't getting overly excited and setting themselves up for failure in the future. Now, director of Benham and Reeves, Mark von Grunder, stated that any market slowdown is likely to strike fear into the heart of the nation's homeowners, but a reduction in the rate of house price growth would be largely welcomed. And I think we can all agree on that. I think everyone wants to see some sort of correction or slowdown just so people can get their eggs in order. Now, James Forrester states that despite the panic of recent week, we're simply seeing no let up from buyers on the ground, and there remains a far greater appetite for homeowners than the available housing stock to satisfy it. While this remains the case, any fears of property market crash can be firmly put to bed, and we expect to see house prices continue to increase on an annual basis throughout the remainder of the year, albeit at a more measured pace, as has already been the case in recent months. So James is one of those people, and again, he could be completely right, where he feels that house prices will just continue to rise, unlike Samuel earlier on. Now, managing director at HBB Solutions stated that all current signs point to a housing market running dangerously low on steam when buyer demand starts to fade, while dangerously overinflated house prices can no longer maintain the trajectory of last 2 years. So again, another conflicting view. I'm leaning closer to this one. Which one are you leaning closer to? And just very quickly, there was another report as well that I pulled off from Black Knight, where they said that if sales continue to fall at the rate that they have for the past few months, inventory would cross the 6-month threshold by December, typically a point at which landscape shifts from a seller's to a buyer's market. So it's going to be interesting if that happens, my friends. Let me know what your thoughts are. Do you think we're going to see house prices continue to rise that many like myself are predicting. Thanks for watching.